My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little money. My job is not just to entertain, it's to teach you, to educate you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. There's something happening here, and what it is exactly clear. We've become a nation of cheapskates. I say that as a compliment. Nobody gets away with charging too much anymore, not in this country, no matter what industry, perhaps even the drug industry. It's happening now. It's happening fast, and many companies are being left behind by the change. I see it everywhere I go, in the grocery store, online, in the mall, and, of course, in the stock market, where you either demonstrate value like a Walmart, a Costco, or an Amazon, or you get slaughtered like a Target, which plunged $33 or over 21% today. And that's my takeaway from this sedate session, with the Dow gaining 139 points, S&P flat on the day, and NASDAQ dipping 0.11%, although it was much uglier midday. We think this cheapskate story is limited to retail, don't we? But it's not. For example, I've never really thought about value when it comes to tech. I cared about whether there was a better mousetrap. The price of goods was constrained by one simple issue: how much the customer is willing to pay. And the customers seemed pretty blind at cost when it came to tech. But now with Nvidia, the largest company in the world, by the way, we're seeing something wholly different. We're seeing a company with a product that's incredibly expensive on the one hand, but incredibly cheap on the other. If you're a cloud service provider and you give Nvidia 40 G's for a version of its latest and greatest chip, a Blackwell, you can make 5 times that. Insanely expensive as a product, dirt cheap as an investment. We keep hearing that Nvidia is charging too much, or that demand is topping out, or the stock's overvalued, but the proof is in the pudding. And CEO Jensen Huang has repeatedly told me about this 5-to-1 ratio, profit-to-cost ratio. That's not just talk. This quarter backed it up. Nvidia reported a sizable top and bottom line beat. Healthy guidance for the current quarter. Blackwell, that latest invention, full production, which was a huge worry going into earnings. Maybe that worry was contrived, ginned up, perhaps. Jensen says demand for the current chips and anticipation for the new ones is, quote, incredible. Of course, there's sellers, grumpy, clueless people who keep hoping for another one-day gain of 20% like we had last year on earnings, and they are disappointed. I say let them sell. I don't care. Here's your hat. What's your hurry? And don't let the door hit you on the way out. The cloud service providers, Amazon, Google, Oracle, Microsoft, simply can't resist buying these high-end chips. Not because they feel compelled to keep up with the competition. That was another bear canard. But because 40 G's for one of these is a bargain. I'm sick of the bears telling me there aren't enough uses or that things are maxed out at Nvidia. I say do some darn homework. The so-called expensive Blackwell is about making money with your money. Nvidia is about value. You see the kind of bargain hunting I'm talking about everywhere these days, even in pharma. Go listen to that Walmart quarterly conference call. The only fly in the ointment the whole time was the price of the GLP-1 weight loss drugs and how they ding the pharmacy business's gross margins. How could the price of one class of drugs be so important? I think it's because there's a scarcity of GLP-1s, even with Eli Lilly and Novo Nordisk going all out. It's only going to get better, though, because Lilly's spending billions to build more plants in order to meet the demand for the wonder drug. No one else can do that. They aren't rich enough. The GLP-1s, they represent value. Because it's not just about diabetes and weight loss. They're lifesavers. They're being used against hypertension, being used to reduce major cardiovascular events. They can help control sleep apnea. And, of course, they're also effective, never mentioned, never talked about, against alcoholism with its terrible liver side effects. Millions of people, they haven't gotten approved for any of these indications. They'll never get it for alcohol. Too complicated. But GLP-1's not some simple hack drug. It's a revolution in healthcare. No wonder Eli Lilly can charge such a value, such a huge premium. It's valuable. What else? We have all sorts of data about how going out to dinner costs a lot more than it did pre-COVID, but people hate that. You know what? They really like companies that are trying to do something about it. Hence why Texas Roadhouse and Brinker, home of Chili's, are just crushing the numbers and making mincemeat of their competitors. I went to a Texas Roadhouse recently in Dallas. Oh, man, I spotted a dinner for less than $11. Made me feel like a king. Country fried chicken or grilled barbecue chicken or pulled pork or chicken Caesar, 2 sides, $10.99. Are you kidding me? In 2024, not possible, but it is. That's only bested by the 3 for Me deal from Chili's that you see advertised during every single NFL game. Fountain drinks, iced tea, chips, salsa, and that killer smash burger. for $10.99? Again, you must be kidding me. In 2024, yes. There's one word reason why Brinker and Texas Roadhouse are up 189% and 58% for the year, respectively, and that's value. The American people are tired of paying up. They feel gouged. They feel betrayed. They feel that the only thing about brand loyalty is that it isn't worth a dime. They want a better deal. They'll eagerly switch lifetime habits in order to save some money because prices are up so much that you feel like an idiot if you're paying up. And there's a reason why Costco has tens of millions of members. I wish you could go with me on a field trip to Costco. It's just wild. I went to the Costco near Allentown, Pennsylvania the other day. It was more of a pilgrimage. No pilgrimage is complete without a stop at the food court. In 1984, Costco offered a quarter-pound all-beef hot dog and a soda with free refills for $1.50 in a Portland, Oregon store, and it's nationwide now, and it's the same price. Are you kidding me? Whenever we stock up at Costco, I pay a king's ransom because we're loyal to the cause of low prices, and Costco has instilled that loyalty in a very visible way. I like to go to Costco on an empty stomach because, man, those free samples are dynamite. You see the little small pizza squares lately? Whew. Don't fill up before you go there. But it's the $1.50 dog that makes me yearn for Costco. They can offer great deals because they carry a smaller selection of products. Enormous bulk gives them a lot of leverage. Yet right now, people only have loyalty to value. And that's the kind of country we've become. The value of a belt, thank you, or a shirt or underwear or jeans from TJX. Shot the lights out this very morning. They buy excess inventory for struggling retailers for next to nothing, then mark up the goods ever so slightly, giving you amazing bargains. TJX has been keeps building a lot of stores because they can't keep up with demand. Look at this thing. I got this thing for $15. Hey, the other guys are a pound of flesh from Venice. This is from Milan. $15. I would take it off, but I think it's probably not the right. I don't know. We got new people coming in and running the company. I don't want to leave a bad impression on them folks. Anyway, TJ Maxx, I love it. Which brings me full circle to Target. Our loyalty to value means that if you want to buy Dixie paper bowls, Kellogg's Fruit Loops, Dawn dish soap, and Tide Pods, and then have them delivered, we'd much rather pay $48.13 from Walmart than $62.96 at Target. Yes, those are actual prices, actual goods that were bought today. And that's too big a differential. Walmart scale and smarts are simply besting Target in the price arena. Don't get me wrong, I love Target. I think it's so much fun to shop there. But in this new sit at home and order world, why do I really care how much fun Target is? If they can bring it to my house at roughly the same time, why do I care if it comes in a red and white bag or not? I am loyal to value, and Walmart is offering me value.
House of pleasure.
And that's why Walmart stock could be up 66% for the year and still climbing, while Target's off 14%, most likely still falling. Bottom line, prices have gotten so high over the past few years that we're losing our loyalty to brands. These days, this whole country is about one thing: the Benjamins. I say we take questions. I say we start with Chuck in Florida. Chuck.
Hey, Jim. It's Chuck from Boynton Beach. How are you?
I'm Boynton Beach, and my wife will be there in about a month and a half, and maybe she'll have me. I don't know. She's not that crazy with me lately. Maybe it has to do with the NFL and watching too much football. What's going on?
Yeah, I just wanted to say it was a pleasure meeting you and your wife in Palm Beach a couple of months ago. I'm still sipping on.
Oh, you went to the? Did you go to the bottle signing?
Sure. Yeah.
Man, that Phosphoro, I love it. We got the new version, Ensemble. What's going on?
Yeah, Jim, I want to ask you about a digital bank in Latin America. They do their business mainly in Brazil, but they branched out to Colombia and Mexico as well. They had a great third quarter. They're rapidly growing, and they're going to launch a telecom mobile service as well. Warren Buffett has taken a stake in them. And, Jim, I wanted to get your opinion on New Holdings, symbol NU.
You know, I've been waiting for this thing to explode because it's got some of the best shareholders, some of the smartest people in the world. I've been waiting, and now it's happening. And you, my friend, have horse sense. I like that stock. Oh, come on. I want more questions. I got the music. I'm trying to make a new impression over here. It's control room people. It's actually not control room. These are the people I'm up against. I want to do more. They want to do less. Okay? Oh, that fellow's from London, I think. All right. Look, the consumers' loyalties have changed. Allegiances to specific brands are out, and loyalty to value is in. Oh, man, tonight, Williams-Sonoma soared to a new all-time high today. I'm checking in with the CEO, fresh off that retailer's raised outlook and earnings beat. Then Palo Alto Networks crossed the tape after the close. Yeah, the sellers come in because they don't know what they're doing, but that's okay because you have every right under the first minute to be as stupid as you want to be. Plus, I'm sitting down with Stanley Black & Decker CEO to hear from how Trump's trade policy could affect their business. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.